In this video, we will look at how to work with the aging of receivables method for estimating bad debt expense. The journal entry is going to look the same as far as the accounts involved as the other methods. The difference in all three of the methods are going to be how you calculate it, and the amounts are going to be a little bit different. If you'll take a look at the screen here, we have an aging of receivables method. So we have an aging chart listed. So what a company would do is they would list all of their customers, and they would list how many days old the accounts are. So you can see in this particular example we got 1 to 30, 31 to 60, 61 to 90, and over 90. And you can see you would just add up the total for each column to see what total you have of receivables due in that amount of time. And take a look at the 1 to 30 day category. We estimate that 1% of those will be uncollectible. And then if you look at the ones over 90 days, about 90% of those will be uncollectible. So basically, the older an account gets, the less likely we will get our money. And that's probably common sense. The longer somebody doesn't pay, the less chance we have of getting our money from them. So the percentages are going to differ by category. In some of your homework problems, you may have to do an aging schedule, and that's how it would work. But what we're really concerned about is this final number. In this example, the total is 185 for all the different categories. And so that's how you would get your total of what you want the allowance account to be. So that's just an example of aging of receivables. It's an aging schedule, we would call it. Now, in this particular problem that we've been working with, it says using the aging of receivables method, we estimate that the uncollectibles is going to be $15,000. So where the $15,000 came from would be from doing an aging chart like this, and the total at the end would have came out to be $15,000. Okay? Once you get that $15,000 number, or it's given to you, you know that $15,000 is your target balance, or what you want the balance of the allowance account to be. Then we have to look at what was the beginning balance in the allowance account. In scenario 1 that we've been working with previously, we assumed that the beginning balance was $1,000. So if my target balance or desired ending balance is $15,000, how would we get from a $1,000 credit to a $15,000 credit? I would subtract 15 minus 1,000 and get 14,000. And you can memorize the add or subtraction part, but the easiest thing to do is to look at it in T-account form and determine this is the number that I need, and then double check your work. 1,000 plus 14,000 is 15,000. So our journal entry would be for the 14,000, the amount needed to get the account to the proper balance. In using that aging chart, it's easy to see why the receivables method is different, because you've already worked with some of the receivables in the past. They may be been in the 1 to 30 day late category last month, but now they're in the 30 to 60 day category this month. So that's why the balance sheet or the receivables approaches work a little bit different than the net sales one. Okay, next let's work with scenario 2. And in scenario 2, we assumed that we had a beginning debit balance. Okay, and our debit balance was $300. How would I get from a $300 debit balance to a $15,000 credit balance? Well, I would add those two numbers. 300 plus 15,000 is 15,300. Or another way to look at it again is you need to credit the account for at least 300 to get it back to a zero balance, and then an additional 15 more thousand. What amount would we use in our journal entry? We would use the 15,300 to record for bad debt expense, and the credit, of course, is represented here to the allowance account. So that's how we work with the aging of receivables method.